welcome. Our next speaker is a very familiar face to all of us and a very popular face. My privilege to welcome Mr. A. Balasubramanian, Managing Director and CEO, Aditya Birla Sun Life AMC. Bala sir, as he is fondly called, is a stalwart with over 3 decades of experience. He has overseen the growth of the industry with many pioneering practices and a great team. Bala sir is the chairman of AMC, a member of the Board of Governors of NISM, as well as an ex officio chairman of AMFI's Financial Literacy Committee. May I just add that Aditya Birla was conferred the Outlook Award, I think, a couple of days back for the most innovative investor education initiative. Congratulations, sir. Congratulations. He is also a member of the advisory committee for SEBI's Investor Protection and Education Fund. Basically, education and investor awareness and financial literacy runs in the ABSL blood. He will present his case on a very interesting topic, MF industry sahi hai because India sahi hai. Welcome, sir.
Thank you. I'd like to be part of our family members, Sahi. I just met people outside who've been dealing with for the last so many number of years. And this association has been, again, one of my longest association, even for me personally. Therefore, thanks to all of you for inviting me for this event. I think when I was asked to give a topic, of course, we can speak on many things. But at the end of the day, what is most important from this business point of view is the optimism. Optimism and how confident or convinced about the growth of the economy, about the growth of India, about growth of financial savings, how it can shape up in any country. I think the reflection of any country comes on the basis of how banking industries performs. That's the way most of the economies are measured. The way the barometer we check, of course, Sensex is one part, no doubt. We can say if Sensex does well, we can say India is doing well. But the fact of the matter is, if the banking industry does well, then we can always say that an economy is doing well. That's why I always call it the proxy. The mutual fund Sahi is something which I coined this word in 2016 as I was the chairman of AMFI. I must give due credit to all my committee members who are representing the other AMCs. There are 5-6 members who are part of my team from the large fund houses. And we are looking at this mutual fund Sahi. I was not very sure whether mutual fund Sahi as a brand will get the blessings from the God. For me, the God is SEBI always, right? So I always look at regulator as a God. And when I went to SEBI asking for their blessings, I was very surprised, a lot of input that came from them as to, Bala, what all you can do in this to make it more appealing to the investors. And that's the way the mutual fund Sahi we brought in. Since then, I think lots of things happen. I think sitting in this room, many of you would have been associated with the mutual fund industry for many number of years. And the kind of mutual fund Sahi got established the last 4-5 years, I think has been humongous great success, and in which all of you have played a bigger role. I think one is mutual fund have played a bigger role, no doubt. And you all as a partner have played a bigger role in this. Therefore, this is something all of you should feel extremely proud. This definitely deserves a big clap. Then the question is how structurally is actually moving. Clearly, from India point of view, the last 6-7 years, lots of things we have done. Yesterday, I met one of the very senior gentlemen in Bombay. I'm not naming him. Very senior gentleman, senior-most gentleman. He does a lot of work in the capital market, one of the world veteran, and most of us, we do look up to him. And I just met him for some purpose, and he said, Bala, there used to be a time where Delhi used to look at stock exchange as something is fishy and not trustworthy kind of things. I'm glad in the last 4-5 years everything got changed. The reason I am referring this, capital market is now being recognized by the government of India, and the mutual fund role that has been played is also being recognized by the government of India for one simple factor, which all of us used to always ask a question to ourselves, FIs ka kabhi buying band hoega, therefore we can go and sell. They basically short sellers. That's the way the market used to think. Today, they are asking reverse questions, mutual fund buying kabhi band hoega, so they can come and make investments. That's completely reverse. So this is something has come because mutual fund Sahi hai. So that is the bigger understanding that I always gather from the market point of view. Second is, I think what has been done in the last 4 or 5 years by the government, I think there are many things that they have done. Now, of course, we can actually keep putting long list of things that they have done. But the fact of the matter is, the mother theme that the government has done, I was writing an article for India Today, which will come, of course, next 1 week on the next 25 years of journey. It's very difficult for me to write for 25 years of journey. So then I put a formula that 60% I'll speak about the past, 40% I'll speak about the future. So initially what I wrote was 80% of the past and 20% of the future. I said it has to be reversed. In that context, when I was looking at it, clearly the foundation has been laid. In the last 4 or 5 years, foundation has been laid. How the foundation has been laid? Clearly, if you look at the way the payment banking systems has been put into use, we have now become a role model in the global markets. I think today, if UAE and other countries are going to adopt the payment banking system that has been introduced in India, that is something that not only should feel pride, it's also for connecting India in one go through the payment banking systems. That's something as big revolutions happen. I think Reserve Bank of India and Government of India have played a bigger role in setting up UPI, and that's I think bigger things happen. Second, of course, is the way the government has put in the Make in India as a theme, and initially, and Make in India as a theme was not catching up to the extent it should, but it got proved in the period of pandemic how well you have to be self-sufficient from your own country point of view. I think you need to have your own manufacturing, you need to have your own productions to meet your own needs of the country as a large, whether it is on power, whether it is on infrastructure, whether it is on manufacturing cars for yourself, and all such things. Actually, the government of India in the last few years have done a great work, I think, again building a foundation for the future. And in the whole context, while all these things were going on for quite some times, but has it been put to a test at any point of time in the past? Like how we look at a business continuity plan is one of the way in which you look at actually the put to a test. That also, if you see in the last 2 years, I think the way the global market have seen inflation rising significantly, and they are not even prepared for the worst, and therefore they all got hit, whether it is on the policy making or in the way the governments are prepared to meet the consumer demand and needs, or controlling the prices. All such things, if you look at it, and most of the developed economies, despite being a developed economy, were not fully prepared, whereas India is actually fully prepared. Therefore, again, building a base for the future. And while this is happening, the whole federal system, the way it's been functioning the last 4 or 5 years, I think clearly the government social security system, which is basically uplifting the entire middle class population to a higher level, which by way of coming out of schemes which are more favorable for the mass, more favorable for the middle class population, and therefore the inequality ratio, basically we call it the inequality ratio globally, and inequality ratio is, of course, will always be there. I think the rich will become richer, and not necessarily poor has to become poorer. Poor also has to become better. I am not saying richer, and poor also has to become better. That's the way, the better living. That's, I think, the focus which the government has brought in. I think clearly it talks about the way the inequality has to get reduced. I think the prosperity of the entire country is not just coming only from Mumbai or Bangalore or Hyderabad. I think there was a time where Bangalore was the biggest driver of Indian economy. Thanks to the Silicon Valley of US sits in Bangalore. There is no question on that. So Bangalore was actually the driver. The same way I come from Chennai. Chennai was the driver of the entire automobile sector on the manufacturing side. That's the way historically the country has been built. If you again go to the north, you'll find again manufacturing textiles would have contributed big time. At the same time, tourism. So that's the way the whole country is insulated and help the growth of the industries. Many times we joke actually that if you look at the Bihar GDP growth for the country is actually far higher than the contribution of GDP coming from the rest of the states. And there used to be a time where the Bihar contribution was almost about 10.5% compared to other states which would be somewhere in the range about 7 to 8%. The reason why is coming in the whole federal system, the high competitive pressure which is coming from various states also have been driving the economic growth. This is something that is happening very beautifully, and given the fact that every state compete with each other to get the best of the talent, best of the industry players into the respective states. I think it was initially started with Bangalore, Karnataka. I think today every state is doing it. The very fact that now I come from Mumbai. Last week I was just saying the Tata son Chandrasekhar being named as the chairman of the Economic Advisory Council of Maharashtra government. And such a powerful body now finally is coming as the economic advisory body of the Maharashtra government. Then you can imagine states like Maharashtra, I would probably call it a sleeping giant. If that's woken up, then you can imagine what could happen. Because Maharashtra also one of the bigger contributor into the economic success for the nation as a whole. Therefore, this is something my own belief is we are laying a foundation for the next 25 years. I think if you have to look at the 100 years of India journey from the time of independence, definitely I think each of these moving parts are now falling in place with a strong foundation, with a strong process, and the moving points that need to be get connected very clearly from the point of view of making this successful. I think it definitely is happening in India. From the financial market point of view, I think integration of financial systems is something has been the card for quite some time. Why I am saying this integration, I think from a multiple number of banks. I think today the government of India has now brought the public sector number of banks. Some of the banks, historically like Corporation Bank coming from Corporation Bank, Syndicate Bank, coming from the same land of where we are standing. Today they are not there, and complete consolidation happened. This is actually happened in the banking industry, and the same way integration also has happened in the way technology actually connecting everyone from the banking system point of view. Thanks to the earlier mention about banking system, they got revolutionized, and that something is actually clearly making the whole country integrated from the point of view of driving the futures. And the last point with respect to the coming back to the banking system, I was just seeing some numbers in terms of banking industries. Last week I just caught up with most of the bank CEOs as part of my own year-end catch-up. And this is the first time ever I am seeing the banking industry is in such a sweet spot. It's in such a sweet spot, despite they growing at about say 20 to 30% in the industry, they don't need to go and raise a single rupee of capital, equity capital. Why I am specifically saying this is all point of times in the past, most of the time in the past, there is one issue which always used to come. The banks will come to the market for raising capital, and when they raise the capital, of course the capital is needed. If you don't have 100 rupees of capital, you cannot build 700 rupees of loan. You can't give, it's about, in the banking systems, the debt to equity ratio is roughly about 1:20. 1:20. In the banking, in the NBFCs, the debt to equity ratio is about 1:5, 1:7, 1:3, 1:8, depending upon, of course, DHFL has 1:15. ILS would have been about 1:20. In the banking system, because deposits is one liability for them, in the banking system is almost about 1:20. And if you have 1 rupee of capital, you can lend 20 rupees by way of borrowing and so on and so forth. That's the way the whole banking system functions. Today, the first time ever in the last number of years, the Indian banking system is so well prepared with the capital, high capital adequacy ratio. This is something fundamentally make the Indian banking system very, very robust for the purpose of future growth. And as a result of the address, rather the solution which the government of India brought in, of course, it was started by Manmohan Singh as the Prime Minister, cleaning up the whole banking system. Today, the entire banking system is cleaned up so much, there is nothing much to be cleaned further. It can only get better. I think the cleaning up systems has now been done so very well. The resolution mechanism has become so fast, superior. Customer default ratios today is actually out in the public domain. Today, any of us in the early days have defaulted on credit card. We can continue to get credit card from somebody else. If SBI doesn't give you if you don't make payment on SBI credit card, you go and take Indian Bank, or go and take Citibank, or go and take Standard Bank. Today is all history. Because there is a complete integration of the data, the customer profile is completely integrated. You may not know about your own profile. There is somebody that actually knows your profile, which is the centralized data systems. Many times people say the privacy of data, but somebody already got it, therefore the privacy of data would, over a period of time, will lose its relevance. That's why I want to say. So this is why it is happening. Definitely what's happening is, in the whole process, one good thing which is happening for the prosperity is the aspiration of India, of course, keeps rising, absolutely no doubt. Youngsters are becoming now more like entrepreneurial kind of model. No more, it's about, even one of your community gentlemen whom I know for the last 30 years, and he called me David yesterday and saying, Bala, my son is coming to Bombay. I want to spend some time with him. So I had a tight schedule. But anyway, I meet youngsters and encourage them at the next round of journey. When I met him, I asked him, what did he do? He said, I studied in New York. I said, why did you come back? I said, no, I want to take my dad's business to next levels. I asked him, how bullish you are? He said, the very fact that I come back from New York studying, I could have got $200,000, $300,000 salary, but still I come back and I want to drive it because I am extremely bullish for the next 30 years. A youngster, he's about 27 years old. And that's the way I think is moving. Therefore, the youngsters who are actually going to drive the next round of economic growth, I think is going to be far more superior. And finally, in the whole model is the per capita income. I think that's most important. From your point of view, whether the mutual fund Sahi will get retained, for India Sahi will get in, I think India Sahi is becoming, definitely is gaining more and more popularity. India Sahi is becoming more popularity. I think popularity may be the wrong word to use because popularity may not sustain, but it's a sustainable popularity is getting in. Because in the global space, one looks at it. After seeing China, even today, after 2.5 years, they are struggling with the COVID. I would not, such a large economy, very difficult to believe that they are struggling. Very difficult to believe. Extremely difficult to believe they are struggling. Because they got trapped in some form or other due to the various political pressure they would have brought for themselves. Now they are suffering. Russia, despite being a large economy, being one of our large partners, they themselves actually have put them at the risk of not getting recognized for, at least for many number of years to come in the global arena. I think this is where I think whatever the government has been doing is actually being recognized by the international players. This is something as a country, one should look at it from the purpose of taking a bet for the next, say, 25 years, or many number of years you take a bet, which is the one country one can take a bet in the global space. Clearly, I think India is becoming one of the spot in the global market point of view. So what does it mean from a capital market point of view? Definitely if I am sitting in, say, US, if I am sitting in Canada, and managing large pool of money, right? But trillions and trillions of dollars of money, I'm using it. So where do I actually look for an opportunities for those investments to go into the various market? Naturally, India is becoming the large recipients of FDIs, large recipients of FDIs, large recipients of FIIs. Therefore, India's prominence can only go up beyond what we already got. So this is why I think I'm saying that India, the way mutual funds say, India say, if it is not there, mutual funds say cannot be there. So that's something, fundamentally if India is becoming bigger and bigger from the recognition point of view, don't worry about the market. Market is a function of various things. But I think what is most important is the recognition has to keep on rising. I think we are in that trajectory. When we look around the world and how they are functioning, how India is functioning, fundamentally putting things in place for the building the future. in the whole model, if there is so much of recognition is going to come from overseas market, definitely India's growth rate will become better, the savings rates will keep rising, and the pool of money, that's of course lying with the public at large, can only get better. And finally, the government of course is focusing on the uplift in the whole rural economy. I come from rural background, I know how the prosperity is being pushed. I lived in the rural village, which all of you know about it. And I have seen how things are progressing, how the aspirations of people are rising, how the awareness level of the rising. That's also something is actually amazing to drive the Indian economic growth for the next few years. That the savings at large, even I was just looking at each of these locations. I was just doing some kind of mental math last week when I was talking to a bank. And the bank said, I am operating in a rural India, which has got about 10,000 population. And I was just doing a mental math, a 10,000 population, and on each households, I was just making some assumptions. Easily anywhere between them must be worth anywhere between 50 lakhs rupees to 70 lakh rupees. I just took the assumptions. The reason I took 50 lakh, 70 lakh rupees, any house you take at minimum cost about 15 lakh rupees, any village, 300 rupees per square feet if I have to take, or 500 rupees per square feet if I have to take. That's something I just do the math. Second, I did a math. Whether you are constructing a building in Mumbai, or in Bangalore, or in my place, village, it ranges anywhere between 1,900 rupees to 2,300 rupees. It doesn't differentiate. He's also paying the same cost, which otherwise I am also paying cost. Except, of course, he is getting relatively a better advantage of labor and so on and so forth. So in that model, if you have to put it on 5,000 people living village, then the average net worth, if I check about 70 lakh rupees, that what must be the equivalent size of the bank in terms of deposits? So I'm not saying every money will come to the bank deposits. Then I did a math, in one of the examples that I took, the bank deposit exactly to match my math, which is coming almost about 50 crores of the deposit that they have in that particular location. Just imagine the same number would have been somewhere around 20 crores of rupees in their bank deposit, which is exactly the case. So this is, I think, the rising income levels is the one is going to ultimately, from investment point of view, is going to become the large pie. So I think today nowhere is going to be only the rich will be able to make investment. But definitely, I think even the middle class income will become the large investors. Therefore, from mutual fund Sahi point of view, one of the agenda which I am taking as even as AMC chairman, of course, I'll be there till October 2023 as AMC chairman. One of the things which I am driving at this point of time with the committee members, of course, and Rao is one of my committee members, we are doing the drive where how mutual fund can be made to be available for the mass as a whole. Mass as a whole, because today the time is right, because awareness levels of products have been rising. Mutual fund Sahi have already got the huge acceptance from the investing public at large. Awareness about this investing as a principle in the capital market is not being done only by mutual fund alone, it's also done by other regulators. In fact, Insurance Council is coming with a huge advertisement plan on insurance as a concept. IRDA, for all the people, now is talking about every household has to have one insurance policy. So now putting a big mantra that one. So on the same context, see, I was telling one of the conference last week that every household has to have one SIP. So that's why I was building the whole story. So even Reserve Bank of India, I go and meet them every now and then for something or other. They themselves are appreciating the way mutual fund Sahi actually made an inroad in every corner of the country. Therefore, one of the things that we are doing is take the mutual fund Sahi to the masses, take the mutual fund Sahi in every local languages, and almost about 14 languages we are doing it. I think that will become very large in terms of advertisement. Believe in the number of money, the amount of money that you are spending together. See, the collective efforts are always extremely powerful. Individual efforts can of course give me a short-term success, not necessarily that success will become long-lasting. But definitely I think it's a collective success, which is what I think AMC as all members, I take pride as one member of Aditya Birla Mutual Fund member, and having been part of this firm for the last 30 years. At the same time, I also take pride being part of the association, where this one association, all of us work together when a person comes to driving it. This, I think, is going to be extremely powerful from the point of view of channelizing the resources into the capital market. Therefore, the mutual fund Sahi is get the full endorsement support from the Indian economy being Sahi, India being Sahi. That is something is coming powerful, it goes without saying. Integration that has happened, awareness level that has happened, definitely I think is making people to cut investment opportunities. That definitely I think mutual fund becomes actually is now forming part of the core investment part of every household. Today, that's also becoming the way to life. Coming to the Aditya Birla Sun Life Mutual Fund, clearly we as a fund house, both personally as well as a fund house, I always tell my team members that Birla as a brand is actually for generations. We had recently our chairman addressing all of us at Jaipur for 3 days, senior leadership team. The vision for the group is actually looking beyond next 50 years. I think this is the first time they are putting up 10,000 crores of capacity, which has to get completed in a matter of 2 years in the paint industry. Normally, any corporate who does the capex of this size and magnitude and making an all India rollout takes 5 years. So this year they are now put it as a big concept. And the next generation must be around 26-year-old generation of his son now getting into the things. And why I am specifically saying this is, groups like us are here for long term. They will be here for 100 years. They will be here for 200 years. So that kind of commitment is bringing in for the financial business. Me being part of Aditya Birla Sun Life Mutual Financial business, I think we have deep commitment to serve the growing needs of a nation, the growing needs of savers, the growing needs of each one of you as our partner. I think that remains as it goes without saying, it's the foremost commitment that we have. And that's one of the reasons we always lived through our own brand, our own success. Many times I tell my team members, I don't have a parent which is a bank parent. I can actually, my parent is actually much bigger than a bank parent from the point of your reputations. So that's why I tell my team members and building it. And that's something we are doing it. From the mass point of view, I think we also as a fund house the last few years, what is it we can do? Of course, performance, all these things are actually function of various moving parts. Sometimes we make mistakes, sometimes we take calls right. At the same time, we make course corrections. All these things are function of. Now, I'm not saying only for my point of view. In the mutual fund industries, I have seen many people go through these ups and downs. Many of the people go ups and downs. The question is, how do we correct them? But at the same time, our initiative has to keep on going on ever. At the end of the day, being in the market, pushing it very aggressively on various things, engaging is very important. There are one such ideas which last year we introduced during the pandemic times. So one of the areas I saw the people at every households, workers, they all suffer. Then I said that we must have employee to employee relationship is a must. Employee to employee relationship is a must as each one of us advocate for our own businesses. Then I said we must launch SAP only for employer to employee relationship. However small the employee-employee relationship is fine. It could be two-member employee for a driver and maid servant, or it could be 5, it could be 10. Then we said Sahi SAP is something we started last year. We need to ensure that segment of the people get addressed by making investments on their behalf in the SAP for 20 years, 25 years. Therefore, their kids can get benefit, their retirement can be taken care, which otherwise they don't have any way to go. That's something we introduced. We introduced Turbo SIP and STP, given the fact there are always a question mark in all of us. We are bullish on market, but we are waiting for valuation to get corrected. This is always there. And that's something again we introduced Turbo SIP, we introduced. Then we also introduced Freedom SIP. Of course, everybody has done. And we also of course have this part of our systems. We can give a freedom in terms of how asset allocation has to move. Also done. And why I'm specifically saying this, eventually the whole system will move towards a solution. I've been part of the system for long. Many times I do wonder, product is a must, no doubt. Ultimately, what will make success in the long run? I think US market is one. If you take an example, nobody of course thinks about the product. They only think about the solution. I think India also will move towards solution. The next round of phase for the financial market will move more towards solution, more towards the holistic portfolios rather than individual, product-driven, transaction-driven, the approach that I think people can take. That's something I see as a solution-driven approach will come. That's why increasingly you will see more and more these kind of solutions coming in. More and more product solution also will come in, which again will take care of the needs of customers. I think beyond the point, markets are becoming, as the market becoming larger, we have to accept the fact that market also will become extremely unpredictable. It will become complicated, become unpredictable, and this kind of volatility what we normally see will remain. But at the end of the day, the fundamental concept of investing for the long term doesn't go away. The basics of investing for the long term doesn't go away, which is what I think we have great success in terms of SAP becoming. Even sometimes if you ask people how many have invested in mutual funds, our investors conference, they don't raise their hand. The one asks the question, reverse the question, ask how many have invested in SAP, sabko haath badh jayega. So that is the way I think we have to disconnect sometimes from the point of view of giving a solution. The moment that disconnect comes, naturally the growth will become much larger. And in this context, clearly, as a fund house, while we are doing a lot of things right, I think we also now thought about the new year, that's 2023. We must focus on at least offering one asset allocation product, which is a multi-asset allocation fund product, which we are now launching it. I was just looking at the merit. I was having some meetings with people. Equity, of course, has to be bullish for long term, no doubt. And fixed income today is becoming the rates, which is almost 2.5% higher than what we have seen last year. So when I was writing my annual outlook report, our annual outlook which I was writing it, I was looking at where was the 1 year back the rates and where is it today. Clearly the rates have gone up 2%. Normally whenever the rates go up, it always comes at the cost of something else. We don't realize it. Anything that goes up, it comes at the cost of something else, which is nothing but an equity. The reason is comes at the cost of equity. For anybody who can't put up a capital in the capital, suppose I want to build my business. If we go to the market for borrowing, how much it cost me to borrow? 12%. If you have to put the same money in the project, it cost me 14%. Return on the capital cost for any businesses is roughly about 14%. It's very simple math. You take the bond rate plus some equity premium and put it. That if it's a 14% your cost of capital, the return on equity for corporates, and I'm saying our Birla Group has gone for a painting business. Unless he actually gets ROE of anywhere between 18%, he will not go for an expand. Right? It is as simple as that. When the cost of borrowing goes up, then unless I get 3-4% margin over and above the cost of capital, there is no incentive for anybody to go and borrow, make investment. That's the way it normally functions. So whenever the interest rate goes up like this, it does have an impact, and that's something which I see as a one thing that you have to keep in mind. And second, of course, gold as asset class. One of the things which I think is changing is that dollar-based assets are becoming. The dollar so far have strengthened. If the dollar moment, dollar weakness happen, most of the currency, if you look at it, have depreciated, and therefore dollar assets becoming an asset class to own. That is where gold and silver plays a role. You can call about industrial activities picking up, all the things are fine. You can suddenly say Indian consumer will go and buy gold. The fact of the matter is, the moment dollar become weaker and therefore other currencies become stronger, then naturally the dollar assets, which is dollar assets are silver and gold, are become dollar assets. Therefore this year 2023, the next 2 years, dollar assets will also do very well, on the basis of which we also now come out of the asset allocation fund, keeping in mind the need for multi-asset class to be part of the portfolio, and equity and fixed income. Fixed income gives a greater amount of safety, and dollar asset comes from gold and silver. So this is what I just want to end, and thank you once again for all of you as a passionate listener, as always, and also the bigger admirer and supporter of Aditya Birla Mutual Fund, and also the member of Association of Mutual Fund in many forms. So I'd like to take the opportunity to thank all of you on behalf of the industry as well as on behalf of the Aditya Birla Mutual Fund, and my colleagues who are sitting here from Bangalore. Thank you.
Thank you. Thank you, Bala sir. Thank you, Bala sir. And can you give me the... Nice presentation. Thank you. No presentation, a good talk. Thank you so much. And all the best for all the decisions the senior management team took in Jaipur. May I call on stage Mr. Prabhu Kongi from Hubali branch, Mr. Ashok BV, Treasurer, MAFDAC, Senior MFD, Mr. Nagbhushan, if he's here, and Mrs. Preeti Kalburgi from Belgaum branch.